Hello everyone, this is Nuresh Merani from nurashtech.co.in. Before I start on this video, do look back into the previous video which has been posted on YouTube, how to strategize across market cycles. A lot of details and a lengthy video which would be a value add to you if you give it time. So please go through it. Now we go to what are we seeing right now. So the last time we made a video, that webinar was in April 2023. People were still skeptical about the bounce back which had started. I remember giving a buy call in March 27th to 30th, and which is where the opportunity was. The messages are there to be seen on Twitter, as well as a lot of our clients in Technical Traders Club did receive those messages. That was the time there was extreme pessimism. People were not really interested. Small caps were falling off. And now what has happened a few months later, we've rallied 30-35% from the bottom. And that is where the big question comes to all of us. Market kya lagta hai? Small caps have rallied 30-35% for this financial year. Is this euphoria? Is there a correction around the corner? Or is the big crash coming in? Or the long-term bull market is still valid? So this is a presentation where we talk about all these questions and very clear answers. So work done by me and my teammate Harsh Doshi. So the first thing which comes up to your mind is small caps are going bonkers. The index has gone bonkers. The stocks are going up big time. The problem is not that the stocks have gone up. You should be feeling happy if you're invested. But the fact is, people did not expect a 30% move or even a strong bounce back in this few months. And that is where there's a disconnect. So in March end, people were wanting to just be skeptical in April, May, and now suddenly there's a lot of FOMO. But is this the first time the index has gone up 30-35% in a few months? Not really. So this is 2021. We had a sharp recovery in 2020 from the lows back to the same highs of pre-COVID. And there was a lot of stalling here. And that is when people thought, okay, we are overdone in the near term. There was a stall, there was a what do you call it, the sideways, time-wise correction here. And once we broke into new all-time highs, the index has gone from 15,000 to 28,000 in the next 1 year with all the small shakeouts. And today we are at 36,000 on the same index. So nothing much has really happened after 2021. But was this rally huge? We went from 10,000 to 15,000, then 15,000 to 28,000. Bigger than the current move. 2017, we got the US election event out here, as well as demonetization. The market saw a nice little shakeout, retested the same bottoms, and from the 2017 low of sub 12,000, we went to 20,000. Is it not a very large move? Yes, and even this move is very similar, right? This is also a 30-35% move, and this is that time-wise correction, which is where you see a shakeout move where the index goes down 5-10% and stays in a sideways range. But by end of the year in 2017 end, we were at 20,000. We could be very similarly placed like this. We'll look at it further. 2014 rally. We rallied from the bottoms of August 2013 when USD INR was $68. From sub 5,500, we rallied to 7,500. Then we crossed above the 2012 highs. The Nifty broke out into new all-time highs. And then we went from 7,500 to 11,000. And there was hardly any shakeout in that period, apart from this shakeout in the end of 2013. But in this move from, say, 6,300 to 11,000, there was hardly any shakeout. Was this a quantum, a bigger move? Yes, it was. So, if we go back to 2007 or we go back to 2010 or 2005, a significant move of 30-40% on the small cap is pretty normal, not the first time. So, what do we look at right now? So, one of the gauges for looking at whether we are in a euphoric zone or a pessimistic zone is to look at the ratio chart of BSE-Smallcap to Nifty. So, this is a chart which I've discussed in my various videos, and a lot of people have started tracking it closely. And a lot of people have been asking me this on Twitter as well as on various forums. What do you do now? The index is, this is what the small cap ratio is, and this is what your chart says. So if you look at the small cap ratio, we are getting close to 1.8, 1.9. Closer to this zone is where we topped out in 2018 as well as in 2010. And before that it was much higher, the ratio back in 2005 to 2008. And on the lower end, closer to 1, we have bottomed out. So this definitely tells you that we are not in a pessimistic zone. We are not in the middle. We are closer to the top in terms of the move. So keeping this in mind, we go further, investigate further. This is one of the things which we look at. The next thing which we look at is the BSE-Smallcap and the Nifty, the divergence which I talk about, which is where Nifty is making lower tops and the BSE-Smallcap is making higher tops. So this has been happening for the last couple of weeks, and you could only realize it only in the last, say when we started breaking 19,250 or 19,600 out here. That is the first time we started making a new bottom. But in the recovery, the Smallcap index went on to make new highs. So this is ideally the second attempt where Nifty is struggling to cross 19,600, but the BSE-Smallcap index in the last 3-4 sessions has made a new all-time high. So this is the classical divergence we look at, right? And this is something which is scary. You have Nifty struggling, the small caps rallying. So yeah, the case is we are diverging, we are on the upper end. Let us look further. Now, why do we look at the BSE-Smallcap and the Nifty divergence? So this is the classical case. Nifty is struggling to make new tops, rather making lower tops, and the BSE-Smallcap making an up move, doing almost a 3x move to the Nifty. So this is something we take it as a negative. And why do we look at the BSE-Smallcap index? So I call it the best Kachara index of India, the best gauge of euphoria and pessimism, because it is designed to represent the bottom 15% of the total market cap, of the total BSE all cap. Now, it has no limitation on the number of stocks. As of now, the index has 959 stocks. Now, this index is almost 40-50% higher than 2018. But the fact is, January 2000, February 2018 to August of 2023, 5 years have also gone back. So it's not a great return. You're not making 15% CAGR. Also, you're at 8 to 12% CAGR on this index from the peak of 2018. So the fact is, yes, the index has rallied. And what has happened in that period, the BSE-Smallcap index, which is the bottom heavy, we become bottom heavy also. A lot of new companies have got listed. A lot of SME has also gone into the BSE main board. So that is also a reason for this outperformance here. Now, why is this scary, right? So we looked at 1.8 to 2 on the ratio chart, the Nifty diverging. So why do we look at it and why is it scary generally? So you look at 2008. Now this was very steep. Out here you understand that Nifty is making new highs. Out here struggling to make new highs, but this has gone bonkers. And the next time Nifty makes a new high, it continues to go crazy. So this is at a small slope, a tough 5% upside, and out here it is up 20-30% in that period. So that's almost a 3x moves and 3-4 new tops and steep ones. And what happened after that? You've seen a huge correction. We saw the opposite of it in 2009. Nifty did not make new lows, small cap. So you had the exact opposite calling a bottom. So this is what is scary, right? You don't want to be sitting on with a lot of micro caps when such a correction comes in. The index fell by 50-60%. Let's look further. Now this is the general normal correction, which is where the BSE-Smallcap outperforms, but the Nifty continues to look lower. So lower tops on the Nifty, BSE-Smallcap makes a new high. We see a decent enough correction. Again, 3 lower tops on the Nifty, BSE-Smallcap makes a new high. We see a decent enough correction. And this is where it gets much more further. The third time, 3 new highs on the BSE-Smallcap, we get a correction. And this time we get a good 15-25% correction from the top. So this is what you want to be looking at. This is the kind of risk when there are low tops on Nifty and high tops on the small cap. So this was a sideways period for the BSE-Smallcap index, a lower drifting period for the Nifty. And this was the last correction. And after that, we saw a recovery, new lows on the BSE-Smallcap, but not a new low on the Nifty. So this was an indication of a reversal as well. Now, the next time we saw this was classical in going into demonetization, or rather the event of US elections, which was known. Demonetization came as out of syllabus question. So if you look at this, three classical lower tops on the Nifty, but around this time you start seeing there's a new top on the BSE-Smallcap. So this continued and made 1, 2, and 3 to 4 new tops before topping out. So we could be somewhere here right now. So in this case, we still have a lot of time. There could be a few more tops before we top out. We are currently very close to the Similarity is more closer to this 2016 correction. And there was a good correction of 15 to 20% on the Smallcap Index. And the recovery was similarly very fast. So this lasted for a couple of months and it recovered really fast. And this was one of the smoothest bull market in 2017. When I say smoothest, from the bottom of 2017, in the full calendar year of 2017, none of the markets across the globe fell by more than 10%. So that is very smooth. And most of the markets were up 20-30% in that period, all indices. Now, this was the next time which we saw a similar divergence. So out here, Nifty is struggling to make new highs. If you look at this period out here, but the Smallcap Index has made new highs. And then, what do we see later? The Nifty also starts making a new high and the Smallcap continues. And Nifty makes a newer high a little later. So, we are similar to be placed right now here like we were in 2016 and before demonetization. Nifty struggling, BSE-Smallcap conquering. Again, it took 2 to 4 weeks and 2-3 tops more on the BSE-Smallcap. And in this case, even the Nifty rallied in the end, but the Smallcap was diverging a lot more. So I remember writing an article in December 2017, how long can it diverge? And it did so for another month, and then it topped out. Now, the worst part of this was the Nifty topped out, the Smallcap also corrected in this period. Then the Nifty rallied, and over 2018 to 2020, we saw something very unusual. The Nifty was up, the Smallcap was down. First time, I think in my career, I've seen this huge divergence on the opposite side also. So this took 2 to 4 weeks to top out, another 5 to 10% upside. So if you got a little jittery here, it went up another 10% over the next 1 month. So if we look at the previous instances, what do we know? Once we start diverging, it could take another 1 to 4 weeks and a lot more FOMO and a lot more euphoria to top out. So that is the first conclusion which we make, that once we start diverging, it could not be an instant correction. It could create more FOMO, more euphoria before it tops out. So what do we do in this period? Right? The Smallcap is outperforming, the Nifty is correcting. So do we increase cash? Do we stay put or deploy cash on dips? So that is where we go to the part that what is the current market structure looking like? What is the market view right now? So for that, I'll start off with a similar market view which we discussed in 2021. So this is an article which I wrote on 24th November 2021. The Smallcap Index had given the first correction. It had started making the first, a swing low being broken on the Smallcap. The Nifty also started making the first swing low break. And that was the time where the market started correcting. So the Nifty topped out at 18,600 odd levels. And that was the peak for the markets. And we did another try in 2022. But this was the zone of 18,500, 800, which is where the Nifty peaked for the next 1.5, say roughly up till March 23. You could call it. We are still in a sideways zone. But the view was that we are shaping up very similar to the 2015 to 2016 period where we had a nice rally after the breakout. So Nifty breaks out 12,500, does a 50% move and now starts correcting. Out here also we went from 6,300 to 9,100, then we started correcting. So the view was we may get into a similar phase like 2015-16 and that is where we do not go into cash even though we expect the Nifty to correct. We expect the Smallcap Index to go sideways. Why? Because in 2015-16 sideways period, you can get into stocks and sectors which could make leadership moves, which could go up. And this was the view in 2021 and it worked brilliantly for us. So we started getting into newer themes. We were into capital goods, etc., etc. Rather than going into stocks, the performance is known. We just completed 2 years on a small case from August 21. We launched the small case on August 24, 2021. We are 2 years up, done. And in that period, the small cases are up. The top 10 techno fund is up 116%. Your top 10 insider is up 98%. The value is also up 70%. Even the Technical Traders Club, our core portfolio, has also done superbly in the same band. So the index has gone nowhere, and even when you were in 2022, the 1 year return was superb, even when the indices were down and sideways. How could we do that? Because the market view was we are getting into a structure where stock specific cycles will continue. So that is more important. People could be looking at the Nifty sideways, and there were still opportunities. So if you were to look at the same market, so this is what we concluded in November 21. Everything going up is over. The Kachra caps, small caps, everything going up is over. It will keep getting very selective, and a new leadership will come in. One has to be extremely careful of the beneficiaries of COVID-related sectors, pharma, mid-cap, small-cap, IT. Be very careful about specialty chemicals. And this have been the three sectors which have actually hurt in that period of 2 years. From November 21 to say November 23, say September 23 now, right? Now, the fact is, what has happened? We've seen some real estate stocks do well. We are looking into power, which did okay. We are looking at infra, we got into capital goods, we got into various other sectors, we got hotels in between. So this view worked out superbly well. So what is the view right now? So now look at this chart. So this is a chart. So what we try to do is we try to understand what is the market structure. Accordingly, we decide what should be our strategy in the markets. So the structure is, this is where we bottomed out in 2013. We were down and out for 2 years, 2011 to 13. Anyways, a bad period. Then you get taper tantrum. Then you get global issues. USD-INR goes to 68. Valuations were low, but we still got a crack. For example, the ratio we talk about, it went to 1. It went to much below 1 also at 0.9. That implied that when the ratio was 1, the markets were interesting. The small cap index was at 5800. It was interesting and looking superb. But in August 2013, it went to 5000, 5200. So there was another 10-15% drop before it bottomed out, right? And from that point, there was a huge rally. Then we got elections that triggered much more moves. And in that move, we saw a little bit of a euphoria. And then we got into this sideways stock-specific period, 2015 to 16. And that is what we were calling out for in 2021. Then similarly, in February 2016, we saw a correction. Could be very similar to what we saw in March 23. We saw a correction and then we saw a sudden recovery. Between Feb 16 to October 16, the index, the small cap index was up 45%. Now, if you were to go to look at the same chart, very similar structure. 2020, 2018 to 2020, the markets, the small cap index is anyways knocked off 30-40%. It was starting to make a recovery from 2019. All the things were in place, and then you got COVID and you got smacked one more time. And we corrected 30-40%. And from the peak of 2018, we are down 45-50%. Then comes the recovery, then crosses into new all-time highs, goes up further, and then in 2021 to 23, you got into that sideways phase. This is the March 23 period, which is where you saw the good enough correction out here in this period. And then we get a one-way rally. So from March to August, we've gone up 38%. Feb 16 to October 16, we're up 45%. So looks a very similar structure. So what do we look at it in that case? There could be a correction going forward. Whether it will stop here or go up another 10% and then we see a correction, tough to take a call. But there should be either a price-wise correction or a time-wise correction going forward. We may have still a few more weeks of euphoria left before we see that correction. But what happened in that correction? This correction came out of nowhere. The event was supposed to be US elections. The correction came because of demonetization. And then what happened? Demonetization happened. People were all looking at how markets could be bad. And then started a rally across the world. So it was not because of demonetization in India that we saw financialization of the world. It was a global rally. From 2017, there was a rally across the world. Now, the first thought which came into mind when demonetization happens, oh, real estate sector is going to get whacked. The best performing sector was real estate. So going forward also in the correction, one will have to keep say an open mind, just like we kept in 2021. So we could actually make good returns even in this small cap sideways period. And that is the skill where we look at sectoral analysis. I have a lot of videos on that too. So the view is, we are pretty much similar in structure to 2016-17, and this could just be a shakeout coming in future. We could see either a correction of 5 to 15% from the top, or we go sideways for some time. But in that period of time, you want to be actually deploying cash in that correction, because when the rally happens again, it could surprise on the upside. That is the case we go with. Now, the other problem is we are seeing this divergence, right? So that is what is hurting us. If the Nifty was up at 23,000 and we were at the same place in the small cap, we would not have a problem which we have right now. So the problem is the Nifty is not going anywhere, and it is not going anywhere because of the heavyweights. So I call it the sleeping heavyweights problem. Reliance, HDFC, Kotak, and the IT index. This is 40% of the Nifty, which is now in a sideways range still since 2021, right? Now, back in 2018 to 2020, remember we had this period where we used to call Trivedi Bachega problem, which is where Ritik stocks, HDFC, Reliance, ICICI, etc., Infosys, TCS, etc., just kept going up, and everything else kept on falling. The Nifty 500 did not make a new high. The Nifty 200 did not make a new high. Small cap index was down 40%. The mid cap index was down 20 to 30%. But the Nifty was up from 11,100 to 12,400. Right? So we learned a new thing in 2018 to 20, that markets index can go up, the small caps can continue to go down, thanks to the LTCG which was brought in 2018. The fact is, LTCG is still a very big impact, because 10% of your profits, long-term profits, are now to be paid in tax, which was not the case before. Right? So it does impact, and that impacted the small caps in a big way. Now, what happened in 2018 to 20 is every bounce got sold into. So there was a bounce, the Nifty went from 11,100 to 11,000, dipped a little, again made a new high. The small caps bounced back and again to fall lower. So are we seeing something similar? Because in that period of 2018 to 20, Reliance went up 60%, Kotak went up 50%, ICICI went up 50%, even HDFC Bank was up 30%. But everything apart from this top 10 stocks were down. Now, are we seeing the opposite? The top 10 stocks go sideways or keep drifting lower, but everything else does relatively better. Could be possible over the next couple of years or the next few months. But we need to think that, because we need to keep an open mind, because we got hit in 2018 to 2019, hoping that the Nifty is bouncing back, stocks will also do well. Right? So this is the divergence which we talk on the opposite side. Nifty making higher bottoms, making new highs. Small cap making lower bottoms. Divergence happens, there's a bounce back. The Nifty falls. So the small cap also falls. Then in 2019, things were really starting to look up. We started recovering on the small cap as well as on the the Nifty as well. But then we got COVID after this bounce. So what does it tell you? That there is a good possibility also that we might be in a stock specific market over the next 1 to 2 years. Till that time, we don't see a clear leadership in the heavyweights. Now, the reason I'm going into this charts as to why one has to be careful in terms of taking decisions right now. So like I said, we are seeing ratio at euphoric levels. We are seeing small cap divergences. Does it mean you go to cash? Now, our strategy is to go to 10 to 25% cash whenever that happens, right? So the last time we did it in 2016, I remember exactly going into Demon. We had gone from 8,900 to 8,400, broken significant lows on the Nifty. I would not go to office so that I could sit on that 25% cash. Luckily, we got another dip after demonetization. And even that dip was not as much as one would have expected, but the rally was swift. But the fact is, because I could get into that rally, because one of my stocks, one of the allocations which we had, also came out with an open offer. In that case, we got an exit and extra cash also, and we could deploy. But the case is the correction was 15%. But if one did not sell and did not buy at the right time, you would have missed out the 2017 bull market. So the fact is, if there is going to be a correction and it is part of a bull market, there are two things to be done. You need to sell right and again buy right. So there are two decisions which need to go right. So today, for example, over the next few weeks, if we get into Euphoria, you are going to sell right, but you have to be sure that you buy right again also. So what do we do? Now remember, it is not going to be exact. This ratio, like I said in 2013, it became superbly interesting and the market index was down 50%, but it fell another 15% in that period. Could be similar here. We could go up 5-10% before we see a correction. So that is possible. So the only case which we come out to the point is this was the time to keep buying on dips. This is the time you keep selling on rise slowly. So if you want to increase cash, go slow or start taking a shift in terms of the kind of stocks you want. You want to go from micro caps to small caps to mid caps, or you want to go from over fancied sectors to sectors which are under neglect, right? So 2 years back, a lot of capital good names were under neglect, which have done really well. So there are many other sectors which are under neglect. So you want to do a rotation. So to conclude, the fact is, yes, the ratio is on the upper end. Is it exact? Not necessary. It could go much more. And also the fact, the last time this cycle played out was 2010 to 2018. It was an 8-year gap. It's just a 5-6 year gap. And the base has become a lot more heavy. A lot of small caps have got listed over the last few years. So the base has become heavy. So that ratio from 1.8 to 2 could go to 2.1, 2.2. Closer to 2, 2.1 also. But the fact is, we are on the upper end. The more important fact is, the Nifty is making lower tops. And the small cap index is making higher tops. So this is classically a divergence. Now, could it stop here? The history tells us from 2018, 2017, 2015, 16, it could last some more time. Could it be another 5% upside on the small cap index and we get into euphoric place? Like in 2017, even the Nifty made a new high, all-time high. And then we saw a correction. So there could be, if you get an euphoria over the next 1 to 4 weeks, you want to increase some cash or take a switch, right? What could happen after that? You could be looking at a 5 to 15% correction from peak, or a sidewise, time-wise correction for a few months and a correction of only 5 to 7% on the small cap index. And still there could be some sectors which do well. So the case is, if you're invested in all the fancied sectors, when I say fancied sectors, it could be defense, it could be EMS, it could be names which shipyard which have gone up really well. You want to book some profits there. So increase cash if invested in fancied sectors. Wait for dips to deploy fresh cash. So if you have fresh cash, you want to hold on to some of it. Wait for dips. The next thing you can do is rotate to new sectors. So the view is that we are in 2016-17 period, right? The market still look interesting. And in this period of time, what do we look out for is the longer term bull market is still intact. So what do? Rotate to new sectors, new themes, start at low risk opportunities, look at start of the trend and reduce allocation to fancy stocks. And the fact is, if it's a bull market, the simplest thing to do is stay put. Keep the strategy simple, keep the allocation simple. This may still not be the time if you have a 1 to 3 year view. This will not be the time to actually do a lot of stuff. Stick to the same allocation. So we continue to remain invested. That has been the strategy in all our sites. So the view is the next 1 to 3 years still looks interesting. Trying to time the correction is one of the most difficult things to do. Rather be ready to take a 10%, 15% hit on your portfolio. So that is what I summed up. Thanks for watching. Keep reading on knowledgetech.co.in. Subscribe to our WhatsApp community. Go to our Twitter. Go to our various other forums which we are. Go to our website knowledgetech.co.in, which has all the details of the services we provide. Thanks a lot, everyone.